Hello, dear traders. Yesterday, Jerome Powell provided a speech that significantly affected markets. Thus, yesterday, Wall Street showed a rally in the US trade. Today, during the Asian-Pacific session, the stock market grew, whereas the US dollar slumped. In our video review, we will take a closer look at this and other events of the first winter day. On Wednesday, speaking at the Brookings institution, Jerome Powell said that the Fed might slacken the pace of the key interest rate hike as early as December. Notably, the FOMC meeting will take place in 2 weeks, on December 13 and 14. During this period, the US will disclose several important macroeconomic reports. Yesterday, the US published its Beige Book report, which contains information on the current economic conditions in each of the 12 federal districts in the United States. According to the reports from various districts, pressure from interest rates and inflation remains the same, whereas uncertainty and pessimism about the future economic situation continue to rise. Meanwhile, the consumer price growth slackened while employment inched up in the most districts. By the way, yesterday's ADP report unveiled that overall employment remains high. However, traders will get more detailed information on the US labor market situation and salaries tomorrow after the publication of the non-farm payrolls for November. We have a risk management balance to strike, Powell said, adding that slowing down at this point is a good way to balance the risks. Then the Fed's chair emphasized that the regulator would raise the benchmark rate higher than expected and would keep it high for a long period of time. Nevertheless, traders noticed some dovish signs in his speech. The politician also warned that history cautions strongly against prematurely losing policy, and the regulator will stay the course until the job is done. The market reaction to those words is reflected by changes in the ratio of those who expect a 50 basis point rise to those who foresee a 75 basis point rise. Yesterday, before the press conference, the ratio totaled 3-1. However, today it's 4-1. In other words, more than 79% of traders suppose that the Fed will raise the benchmark rate by 50 basis points. Comments provided by Jerome Powell led to a slump in the US treasury bond yield and the US dollar value. Today, during the Asian trade, the US dollar index, which measures the greenback against a basket of 6 major currencies, was trading at the level of 105.80 points. The index has every chance to slide to its former low. The US dollar index needed just several hours from late Wednesday to early Thursday to lose more than 1%. In November, the greenback depreciated by 5.2%, displaying the worst monthly performance since September 2010. Since the US dollar is now trading in the red between the levels of 105.30 and 105.90, the new trading months will be opened with a decline. The US dollar also dropped against the yen, and it was sharpest fall as seen 14 years ago. In November, the greenback lost 7.15% against the yen, and today the currency is also falling amid the Fed's comments and expectations of the FOMC meeting. Meanwhile, the yen jumped to 136.60. What's more, the pair's exchange rate is very sensitive to changes in the yield of the US long-term bonds. That's why the decrease in the US Treasury bond yield also supports the yen. Such a confident rise may signal an end of the greenback's bullish rally, which began in March. The nearest support levels are located at 135.81 and 135.57. Resistance levels are located at the previous peaks of 139.87 and 142.25. The Japanese yen opened in new trading months in the wide range of 135.80 and 138.10. continuing its upward movement against the US dollar. The Australian dollar, which greatly depends on the greenback's dynamic and sentiment in the global markets, also showed a rise today. The weakening greenback and the Fed's possible switch to a less hawkish stance are not the only drivers of the Australian dollar appreciation. Notably, the Reserve Bank of Australia also slowed the pace of the key interest rate hike. News from China about a better epidemiological situation is also boosting the Australian dollar. Thus, on Wednesday, the currency climbed to its highest level from September 13 and then entered the range of a 0.6782 and 0.6841. After breakout of the psychological level of 0.6770, bulls are trying to reach another high of a 0.6915, also recorded in September. On December 1, during the Asian trade, the Australian dollar was trading at 0.6862 against the greenback. The New Zealand dollar is showing almost the same dynamic. Since yesterday, the New Zealand dollar has increased to the high of 0.6325 recorded on August 17 and continues gaining in value. The currency is trading within the channel of 0.6288 and 0.6342. During the Asian trade, the New Zealand dollar advanced to 0.6322 against the US dollar. We hope that your income is also growing confidently and that reviews prepared by InstaForex TV team contribute to your well-being. Subscribe to our channel and get useful information. We wish you profitable trading and stay tuned with us.